bringing up our website real quick to show you. If you already have workbooks, I'm going to be looking at material from Accounting 103, beginning on page 34. I believe it's 34 through 40. Excuse me. I don't know why it's taking so long for our website. Here we go. On our website, if you go to beginning right up at the top and click there or hover, you'll see the drop down menu and you can choose training workbooks. And what we're looking at today, you don't have to have the workbooks to understand or learn it, but if you like the workbooks and you want the material that I'm looking at today, I am looking at Accounting 103, and right about near the end here, it says paying from a liability and pass-through liabilities. That's what the 941 tax deposit. That's what we're looking at today. So again, those are available on our website for sale. We can send you a link that you download and print yourself for $12 per workbook, or $22 if you want us to print and bind it and send it to you. But that's where the material that we're going to look at today is coming from. If it's your first time using the GoToWebinar software, did have a little presentation explaining some of that to you, but if you missed it, on the GoToWebinar toolbar, let me see something real quick. Oh, I thought somebody was asking something. Nope. On the GoToWebinar toolbar, there is a little arrow to the side, a little orange arrow. If you click on that, that will minimize the toolbar so it's out of your way and not blocking what I'm showing you. To open it back up, you just click that little arrow again and it opens up. Also, excuse me, I won't be unmuting people to ask questions, but there is a question panel. And you can type your questions in there. Ross is also in the room with me, and while I'm showing you the material, he'll answer any questions you have. And then at the end of what I want to show you, I'll just read them out loud and answer them for everyone. Do try to keep your questions topical, though. We are looking at accounting and how you pay from a liability. We don't mind answering other questions, but just for time's sake and everyone else here, let's try to keep it to the topic. If you have a question about your data, maybe why you have a balance you don't understand, that's probably best going to be handled on a support call. It's hard to help with your specific data during a 20-minute webinar, but we definitely want to help you if you need help with something that we can't help with during the webinar today. Let's go ahead and look at how we pay from a liability. I already have accounting open. I just click on the word accounting to open it. I went ahead and opened it because this computer seems to be slowing down up here and took a little bit for it to open up. But I already had it open, so it opened up really quickly for us. When we pay from a liability, liabilities are our number 2 accounts and our accounts payable vendors. Those don't get numbers, but they are still a type of liability account. And the book calls those holding tanks, or those are accounts that usually collect money that you're going to send off or pay out. Some of the ways that occurs, if you're following along on the book, I'm on page 34, bottom of the page. One way money gets in a liability is from entering a bill. When you enter a bill, that increases your expense account. You're totaling all your expenses for the year, and it increases increases the vendor that you entered that bill for. We're not going to look at paying out bills because that's discussed earlier in the actual book. What we're looking at more is just paying directly out of a liability account, which when you enter a bill, when you go to pay it, you're paying out that liability. But we're going to look at some of the other ways where you go straight to pay bills. You don't usually enter a bill for these. Things like deductions, your 941 taxes, your state taxes, pension payments, things like that, where money's come over from your payroll program or you've entered manual payroll and that money is sitting in a liability account waiting for you to pay it when the time comes. Donations. Some churches will set up pass-through accounts as a fund with income and expenses, and that's fine, but that shows on a treasurer's report, and some churches don't want that to show as income on a treasurer's report, so they will set up their pass-through accounts as liability accounts. And that money just goes right into the liability and sits there until it's time to pay it out. Your loans, mortgages, a line of credit, those are examples of paying directly from a liability, times when you might do that. If you turn to page 35, if you are following along in the book, first we want to look at paying the 941 tax deposit. Now, the payroll program, if you're using that, if you own that, when you calculate payroll, that figures out the FICA and the Medicare and the Social Security, and that all transfers into one account. You usually have one account in accounting called your 941 taxes or something similar, and all those little federal amounts and Social Security and the FICA, that all goes into the one account. You don't have a separate account in accounting for each one of those. To see those different amounts, you can look at payroll reports to see what was Social Security or FICA or the different portions. In accounting, you want those all funneling or transferring into one account that you then will pay that out, usually on a monthly or maybe a quarterly basis. Now, to know how much you're going to pay out, you'd want to look at your pay period deduction report in payroll, because the money just funnels over into accounting, and when you go to pay it, you need to know what you want to pay. So once you know what you need to pay and you're ready to pay those 941 taxes, you go over to transactions in the upper left and then pay bills. I always forget there's shortcuts in the middle, or you can get to the same place by just clicking right on the shortcut in the middle here with the bill and the money. Pay bills. In pay bills, oh, I always like my screen centered. We're just going to click right on quick pay and then view vendors with a balance. We're not going to go to outstanding bills or bills entered today because this isn't a bill. This is just a balance in one of my liability or vendor accounts. Came over from payroll or from entering manual payroll if you don't use our payroll program. So I'm going to click on View Vendors with the Balance, and there we see right up at the top our 941 taxes payable has $6,843.72. To pay that, turn to the next page in my book. I'm just going to put a check here to select the 941 taxes payable. And then I'm going to click on Create Payment. And that takes me back to my pay bill screen. And notice I see the vendor says Internal Revenue Service. Now really quickly, let me show you why. When I chose my 941 taxes, my vendor shows Internal Revenue. If I go into my Manage Accounts and View, and I find my, oops, went past it, my 941 taxes, that is my account name. But when I pay that money out, I'm not paying it to someone called 941 taxes. I'm paying it to the IRS. So over here, upper right, if I click on my vendor payee tab, there I see the actual name I've typed in of the actual what will print on my check and who this money, the 941 tax money, is actually being sent to, the Internal Revenue Service. So I'm going to close this, and we're back to our pay bills. Now again, the program doesn't know how much you owe in 941 taxes. So you'll want to look at your payroll reports to see what amount out of that balance you are paying. And then you're just going to click in there and type however much you're supposed to pay. You can choose your asset account. Here we have our default set up as our Huntington Bank, which is what we want to pay out of. You can choose your payment method, manual, computer, cash, EFT, debit or credit card. If you're doing it online, you could do an EFT. Typically, you do make those online now, so that might be EFT. If you need to print a check or if you're handwriting one, you can choose the appropriate payment method. We'll choose EFT. And now we're ready to go ahead and hit Post. So down here, we'll click Post. And it tells us that transaction was posted, totaling $3,254.12. Do I want to print it? If you say yes, that will bring up a screen where you can make some choices about what columns you're showing and what fonts you want. And if you hit Print again, that will bring up a nice report showing who you paid, the actual details of the transaction and amounts, and whatever columns you chose on the pre-printing report. All right, so that's how you can pay those 941 taxes. Now maybe you have your pass-throughs set up as a liability account. Again, that's a good way to set up your pass-throughs if you don't want to see income recorded and showing on a treasurer's report. You can have the money flowing for your pass-throughs directly into a liability, and it's just going to sit there until you're ready to send that out. Now, if you turn to the top of 37, we do recommend having a different vendor set up for the different reasons you're sending money out. If you look, let me maximize this. If we look here, we've set up our pass-through account as a parent account, which will give us a grand total of all of these sub-accounts we've put under it. And we've created an account here for each of the different reasons we are going to be collecting money. Now, we have a soup kitchen here. We have many locations for our soup kitchen. So what we do with our soup kitchen is collect all the money in the soup kitchen account, and then because they're giving the money to different pass-throughs, then we would do a transfer from our soup kitchen to each of the different specific pass-throughs we've set up that we're sending money out to. So we don't recommend just having one pass-through account that you change the vendor payee on for each time you're sending it to different places. For a really good audit trail, you'll want, as many vendors as you have those different pass-throughs for. Or if you choose to set it up as a fund with income and expenses, then either different funds or different income accounts for those different reasons. But I like seeing it as a pass-through because then it doesn't count as income, and it's really not income. You're collecting it, sending it on. It's not income to the church. All right, so how do we pay these out? Same way we did with our 941 taxes. We just go to transactions, pay bills. We're not, because this money is already sitting in liability accounts, we're not going to enter a bill for this. We just go right to pay bills, click on quick pay, view vendors with a balance. You can see at the top my 941 taxes decreased with the payment we made. But we are looking for, we're going to send our crop walk money out. So we see we have $405 waiting there. Disaster relief, we have money, but we're not sending that today. We're just going to do our crop walk. So we know we want to send all that out. Click on create payment. Type in the amount we want to pay. We're going to pay all of that $405. And this time we do want to do a computer check. So we can go ahead and make sure we have the right asset account here. And we have our Huntington Bank. Make sure we have the right payment method. We want to print a check. So if we're ready to print the check now, we can click on Post and Print Checks. So I forgot to say turn the page if you're following along in the book. We're on page 38, actually at the very bottom of 38. And then top of 39, very important note I already went over. I got ahead of myself. Mentions, again, you only want to pay one vendor out of a liability account. You don't want to have multiple vendors being paid out of the same account because then you don't have a good audit trail of what vendor was paid when you're always changing the name of the vendor payee. So let's just hit post and print. We're not going to print that one. The report, it will look the same as the one I showed you for the 941, just different accounts and amounts. But if we go over to print checks, we see now our check is sitting there waiting for crop walk, $405 out of Huntington Bank checking. I can put in my starting check number, hit print, and send that off to crop walk. All right. Now I did notice on page 39 a typo in the middle of the page. If you have the books, you can correct. It does say instead in our number 2 accounts payable vendor subledger, we set up individual vendors. That should say pass-throughs because we have a pass-through parent account with subledgers or sub-accounts for all of our different pass-throughs, specific pass-throughs. So I just noticed that typo there. All right. That is really everything I wanted to show you from the book. One other thing the book, at least the pages I was supposed to cover in the book, did not cover, but I think is kind of important for paying out of a pass-through. Sometimes the church has a portion they're paying along with a portion that's already gone into vendors with a balance or already just sitting in that liability account. Like maybe your pension money or health insurance, the church pays a portion. So really quickly, let me just show you. Let me make sure we have one of those with the balance. I just see we have time. We have like 5 minutes left, so I'm going to go ahead and add some extra in there. Let's see. Pension. Here we go. We've got money in pension, and the church pays a portion of that pension. So if you have things where the church pays a portion and the employee pays a portion, and that portion's already come over from payroll, then what you do is you go to enter bills, and first you're going to enter a bill for the church portion, just the church portion. So again, I'm sending off pension money. Here, we'll say it's the senior minister's pension amount. His was, I'm just making up an amount, 650. I don't know. We'll just make that up. We'll say done, add to batch. And we're going to go now and click on, well, actually, I'm just going to post this. We could do post and pay. I'm not going to print it. And let's go now to transactions, pay bills. If I look at quick pay and view vendors with a balance, that amount increased. I didn't write it down. I probably should have. But the pension payable increased by the amount I just entered, the 650 I just entered for the pastor. So actually, I'm sorry. We want to make sure we grab that bill. So I'm going to go to View Outstanding Bills, and I'm going to grab the bill, which it shows it has an account balance of $9,000, but here we see the amount due for this bill is $650. So I'm going to grab the bill by going into Outstanding Bills, or if you did Post and Pay, it would already be on the screen. Now, this is just the church portion, which I just entered, and that is an expense that I want to make sure I note. So I'm entering that now. But we're going to go ahead and pay twice that because we're paying the church portion and the employee portion. So I'm going to change the amount to pay to include the church portion, not just, or I'm sorry, the employee portion. The church portion I just now got in there and expensed by entering the bill. The employees came over when I ran the payroll, but now I am paying the bill and I'm changing that amount to pay to include the employees portion that's just sitting in the liability account already. So once I hit post or post and print checks, then it's going to reduce the account. It will clear out the bill that I've entered for the church portion, and it will reduce the account by the additional amount I increased that amount to pay to be to include the employee portion as well. So I hit post and print checks. I could print that if I needed to. I'm going to say no. And now in print checks, I have my crop walk and my general board of pensions, both sitting waiting for me to pay. All right, so still have a little time to spare. I threw some extra in there because I thought that was kind of important. That's another way you might pay from a liability account if you have a church portion to enter first. You're going to enter that as a bill, and then when you go to the pay bill screen, you'll edit the amount to pay to also include the employees portion that's already sitting in that liability account. All right, so that is the end of what I wanted to show you today for paying out of a liability account. I don't see any questions that came in, so you didn't keep Ross very busy. Are there questions? If you have questions, go ahead and type those in the question panel, and I'll read those out loud and answer those out loud for everyone. Oh, thank you. Becky said, thank you. You were always clear and easy to understand. Well, good. My theater degree counts for something. My teenager doesn't always say I'm clear and easy to understand, but I think that's a teen listening issue. Any questions? No questions? Either I was, like Becky said, I was just very clear and easy to understand, or I overwhelmed you. All right. If you're in the middle of typing a question, then I'd go ahead and hit enter and just send half of it and then keep typing the rest, and that way I'll know you have something you're trying to type, and I won't close the room before you finish typing. Wow. No questions. Okay. I think that might be a first for me. All right, well, if there's no questions, then I'm going to go ahead and end today's webinar. I want to thank everyone for attending. Do take a look at our website. I think new webinars were added for July and August, so take a look at those. I think there's a little break after the 4th. I don't think we pick back up until the 11th, but there's all kinds of new topics and free webinars available, and all of these are recorded, so those are put up on Thursdays. New ones are put up on Thursdays. And those are available for free along with all kinds of documents under our support center. So lots of free help out there beyond, having to purchase a workbook. But workbooks are available for sale as well if you need a workbook. So, all right. Thanks for attending, everyone. Have a great day. Bye.